Hi, good afternoon, or soon to be afternoon. We're live, Lunchtime Live. So thank you for joining us for this third installment in our Lunchtime Live series that we are presenting here from the Office of the Commissioner Representing Employers, Commissioner Demerson at the Texas Workforce Commission. So these are seminars, 90 minutes. Again, grab your lunch, grab a snack, grab some tea, and join us. If you're an employer or somebody who works for employers and need information during these unprecedented and uncertain times, we're here for you. So today we have 4 presentations. We're going to be talking about the unemployment appeal process and how you file a claim and process through that, because that's one of the ways that employers lose claims that are otherwise winnable. We're also going to be talking about the financial liability if you're an employer who pays taxes or a reimbursing employer, what that could cost you, these unemployment claims and what we've been going through. Third, we're going to be talking about the best practices for maintaining a health and safe working environment. And finally, but not least, we're going to be talking about Payroll Tax 101, because again, employers, taxes don't go away. So it's also good to know what we are encountering as that happens, as time goes on and the situation develops. So a couple of housekeeping items first. Unlike our live conferences, the Texas conference for employers that we used to have across the state, we are not able to offer continuing education classes, either for SHRM or legal or CPAs, but we're still going to give you the great information, just no credit for these. Also, because we have so many people that attend these, we're not able to take questions live. A lot of you were able to submit questions beforehand when you were registering, so we're going to be able to, time permitting, answer some of those live. But if not, the questions that were pre-submitted will be answered and added to our FAQ document that is growing and changing. It's a living, breathing document, like we like to say, as we have these lunchtime lives and get new questions from employers. Also, if you miss something, come in late, or need to leave early, the session is being recorded, so that will be made available after that. And finally, if you've been attending or it's the first one, please know that we still have a few left in the year. The next session of Lunchtime Live is going to be the first Thursday in November. So that's going to be November 5th. So make sure to register. Okay, look on our website, do a search for Lunchtime Live. You can register there and pass the registration on to anybody else that you think might be able to benefit from this. I believe next time we're going to be talking about some policies that you could implement, or a good idea or best practice in relation to COVID. So again, very topical information. So without further ado, let's get started. I'm going to be talking to you about the unemployment compensation, like I said, the claim process, the appeal process. And this is me, Elsa Ramos. I've been with the Commissioner's Office now for about 9 years, the Commissioner representing employers, but with the agency since 2010. So if you didn't join us last time at Lunchtime Live, I covered the basics of unemployment, because it's always amazing to me how many employers have been paying into the system, have been participating in the system, or dealing with claims and don't know how it works. I'm going to recap just some very brief things in case you missed it. Remember, unemployment system is based on fault, not need, which means that if you lose your job, you're not going to get unemployment benefits unless you've lost your job through no fault of your own. You can't be at fault as the claimant. If you want to get, or not want to get, but if you're going to receive unemployment benefits, you're only entitled if you're qualified, which means you have to be out of work through no fault of your own. So what is fault? If you voluntarily leave your job while work is still available for a reason that's not good cause connected with the work, you're going to be considered at fault in the job separation and be disqualified. If you're discharged, fired, terminated for misconduct connected with the work, you're going to be at fault in the job separation and not be qualified for benefits. Now let's talk about COVID briefly. COVID, natural disaster. If you lose your job, claimants, because of the natural disaster, that's not your fault. Okay, so under most circumstances, if the employer had to close down, for example, not your fault. Because of this, you would be qualified for benefits. Employers out there, this is a natural disaster. It's been designated as such. So there is some protection for you taxed employers. If the job separation resulted from the COVID-19 natural disaster, the employer, taxed employers, are eligible for chargeback protection. The presenters after me are going to be talking about you reimbursing employers, because you too get some relief under the CARES Act. Okay. Now, whether or not you employer are going to be financially responsible or potentially financially responsible for a claim is going to depend on whether or not you're a base period employer. It's all about the base period, folks. I would sing a song about it. because I've written one, but I'm not going to. I'm not going to do that right now. But the base period is this. Remember, employers, you file quarterly reports to us, so we measure the base period in quarters. The quarter when a claim is filed and the quarter right before that don't count, okay? You could be financially responsible for a claim if you reported wages in the 4 quarters before that, those blue quarters. If you're a base period employer, you are in what I call the chargeback zone, because this is basically the striking distance for being financially responsible for a claim. So that's the basics, okay? Now let's talk about how not to lose an otherwise winnable claim. Employers lose claims all the time that they could otherwise win because they're not familiar with the process and maybe not so familiar with some of the tips. I don't want to say tricks because there aren't any, you know, basically have to go through the process, but may not be familiar with some of the intricacies. So we're going to talk about how not to lose an otherwise winnable claim. This graph that you see right here, and if you see the big areas, lack of evidence, no firsthand testimony, late protest or appeal, those large areas, the majority of why employers lose unemployment claims. We're going to address those because those happen again while you're processing and dealing with the claim. And this actually, these numbers came from our appeals department. Several years ago, they did a survey and they were tracking why employers were losing claims. Although we haven't done one recently, my guess is that these reasons are still very similar, very relevant today. So what happens? You're the last employer. I used to be working for you. Okay, I separated from you. Either I quit or you fired me. But whatever the reason for the separation, I file a claim, name you as the last employer. TWC is going to contact you. None of this happens in the dark. Okay, we're going to let you know that I filed a claim. You have the opportunity at that time to protest or agree or to challenge or just give us information, but you're going to get the opportunity to respond. Notice why employers lose lose unemployment claims, late protests or late appeals. You're going to want to respond timely. This is what a notice of claim looks like. You have 14 days from the date that that is mailed to you to submit a response. We try to make it easy for you because you can respond by phone, by fax, online, or by regular mail, okay? If you file a late response, you lose appeal rights. So even if you're in complete agreement that I was laid off due to COVID, and that's what I put on the notice and that's what you receive, if you want to protect your rights, respond timely. Yep, Elsa was laid off due to COVID. Because by responding timely, you preserve your appeal rights. You never know what's going to happen later. Okay, so in my opinion, the choice is yours, but in my opinion, my recommendation is if you're able to, respond to preserve your rights, employers. Now let's go back to the base period. Remember I said that if you're in that base period, in that chargeback zone, you could be financially responsible. You get that notice of claim if you're the last employer before me filing, but you can get also notices because you could be financially responsible if you're not the last employer. So those of you who are in the base period but not the last employer, you're going to be sent a notice of maximum potential chargeback. And based on the emails and phone calls we've received, a lot of you were shocked by receiving notices of potential chargeback from people who had left you, either because you fired them or they quit like a year ago. Now remember, these people are not naming you in the claim. It's not a fraudulent claim because you're being, getting a notice of potential chargeback. TWC sends these documents out. The claimant did not name you in the claim. Now, you want to respond to those because based on the reason for the job separation from a year ago, 6 months ago, whenever it was, your chargeback is going to depend on that, whether or not you're going to be charged. The notices provide you a 30-day deadline. This is one of the longer deadlines that we have because we understand that these people weren't working with you just, right before the claim. If you file a late response, you're going to be charged straight up. Okay, so if you get these, make sure and respond timely. Now, you reimbursing employers out there, if you're in that base period but not the last employer, you're going to receive a wage verification. And it's going to have the wages on there, and they're close to the bottom. It's going to say basically that you could be accepted or be exempt or not have to reimburse or get billed, depending on the reason for the job separation. So please respond to that. A lot of people, you reimbursing employers, get those wage verifications, think that they're just like, oh, they're just checking that the wages match, and don't realize that there's a response deadline. It's 14 days. And this is for you to appeal getting billed for benefits, okay? So it costs you dollar for dollar out of your pockets. It's important for you. If you file a late appeal to this or a late response, you're going to be billed. So it's really important. So now let's go back to, I was working for you, I separated from you. Once you respond, a claims investigator is going to be assigned that contacts the parties to get more information about the job separation, okay? Because of COVID, this process is not running the same way as it was, straight up full disclosure, right? We may not be doing all the phone calls that we used to do before. We may be depending more on the documentation because we have so many claims we have to process and we don't want to delay someone getting benefits that's entitled to benefits. So because of that, don't expect necessarily to get the phone call and wait for the phone call. Respond timely. And if we need to call you, we'll call you. If we have enough information, it's going to go through and the determination is going to be issued. So what's a determination? Determination is the piece of paper, and it's also the decision that sets out whether a claimant is qualified for benefits and whether you're going to be billed or charged employer. So this is what it looks like. And that paper is going to tell you whether the claimant is qualified, the top section, middle section, the employer's financial responsibility, and the bottom is going to have an appeal deadline. Yes, these are bananas. And I show you these because in the many years that I've spent educating employers about the unemployment process, I have written exactly one unemployment joke, which was inspired by a joke that my 5-year-old son used to tell all the time. This is the joke he used to tell. Why did the banana go to the doctor? Because he wasn't peeling well. And he would say, get it? Peeling well? And I was never actually sure that at 5 years old he got the joke. But the point is that at my first conference that we set on, our office put on, and Tommy was talking about unemployment, I wrote my first and only unemployment joke, which goes like this. How is an employer with an adverse determination, so the one where you're losing and the claimant is winning, the one where you're being charged or billed, how is an employer with an adverse determination like a banana? The answer, they're both appealing. And I can almost hear you groaning from your homes and offices. The thing is, nobody promised you a good joke. The important part of that is that you need to appeal a determination that's adverse to you. So I'm showing you the deadline again. Here's a tip. If you have some document from TWC regarding a claim, chances are really, really, really good there's going to be a deadline on it. So make sure you know it. And if you don't, contact us. If you can't find it, contact us. Appeal, 14 days from the date that determination is mailed to you. This one can't be by phone. It has to be in writing, fax, mail, or online. You can include documentation, write-ups, warnings, witness statements. You don't need magic words. You don't need an attorney, okay? I disagree that Elsa should get benefits is going to be enough to get you your appeal. And I know I'm hammering on this. I don't want you to lose a claim. A late appeal can be deadly because if you file a late appeal, we can't get to the facts of your case. So this is how I think of timeliness. So I want you to think of timeliness this way. This is a door knocker on a door in Italy. I think of this sort of as a timeliness troll. Behind this door is all the great evidence that you have to prove that you fired me for misconduct. All the evidence is back there. The video, the witness statements, you know, my own confession, everything is behind that door. If you file an appeal that's late, that timeliness troll doesn't let us get to that evidence. The door cannot be open, okay? And this is what you guys send us in your appeals, but it's just a technicality. You're absolutely right. But it's not fair. You're absolutely right. It's not based on fairness at this point. It's not logical, you guys say. It's arbitrary. It does not further justice. All of those things may be true, but legally, it's a jurisdictional bar. Meaning we don't have the legal authority to look at that evidence if either party, it goes for both, claimants or employers, file a late appeal. So please, for your sake and our sake, appeal timely. So here are some tips, because this is what we see on where employers file not timely appeals. Make sure and check your mail. And I know, or your TWC inbox, if you elected to receive emailed notices and email determinations, check those regularly, okay? If you're gonna be out, make sure someone else is checking the mail in your absence. Make sure we have your correct address. We have a lot of employers who moved years ago. Everybody got their new address. You know, everybody knows where they are now, but they didn't tell TWC. So if we're still sending stuff to the address that you gave us, that's still the correct address. So make sure that we're sure we have the correct address for you, okay? If you use a fax to send us an appeal or a response, make sure to keep a fax confirmation. A lot of times employers show up at the end of the appeal process saying, but I faxed this to you, and they pull out the fax from their file and it shows up as not a successful transmission or it was busy. Make sure that if you fax, you do have a successful transmission. And you can also choose to designate a claims address. Some of you employers have all your tax stuff from TWC go on your CPA. That's fine, but your CPA doesn't handle your claims, and usually that creates a delay. So you can designate an address that is used for claims, which is separate from your taxes. So don't wait until the last day to file an appeal. Why do I say this? Because a lot of you out there are planners and schedulers, and you're super organized. So as soon as you get something, it says, oh, this is the date, and you put it on your calendar. This is the date that I need to appeal or I need to respond. Because of COVID, we have seen delays in a lot of things, from either, millions of people trying to call in, thousands of people trying to fax in, thousands of people using our online system, and the mail. We've seen some delays with the mail too. So try not to wait. If you have time, please calendar. If you're going to calendar 3 days before it's due. Okay, that way what is the word I'm looking for? Encounter. That's the word I'm looking for. If you encounter any problems, you've at least left yourself a little window, a little buffer to get your thing to us on time. Okay, so now you have filed an appeal. What happens? You're going to now go to your day in court. It's going to be an informal proceeding with a hearing officer. Again, it's a telephone hearing, but it's still a legal proceeding, and you don't need an attorney. The hearing officer is going to ask the questions. You should now be seeing the three little pigs. In the person, too bad we're not live, because I might go into my riveting rendition of the tale of the three little pigs, but in the meantime, I'm going to assume you all had a childhood and you remember the story, which is the third little pig built his house out of bricks and was able to keep away the big bad wolf of the unemployment claim, because you're going to be like that third little pig. At the hearing, you're going to present your strongest case, your best case, okay? You're going to provide witnesses and documents. It's a legal hearing. Pretend, even though it's on the phone, like you're in court. Again, you don't need attorneys. Present your most credible, most complete case. Can everybody see the ball? Everybody? Probably getting no's. Can everybody see it now? Everybody see that ball? Yeah? That's because TWC is not hiding it. I love that joke. Nobody ever did live, but I love that joke. What do I mean by that? The notice of hearing that we send you has everything. The statements from the other party are in there. Your statements are in there. The instructions, everything I'm going through right now, are in there. Information related to the claim. The appeal from the other party or yours is in there. What's the date and time for the hearing? This is what the notice of hearing looks like. I'm going to show you the top part in just a second, because it says date and time of the hearing, phone number. You need to register. You can do it online or by phone 30 minutes before the hearing time. We're not mind readers. We don't know where to get a hold of you, where you want to be, contacted. Register. You get instructions on what to do with documents and the information on the hearing officer. That little box right there has that information. A lot of employers lose claims because they calendar that in wrong, or they don't call in. They didn't realize it was 30 minutes before. Do you know what happens when you don't show up to the hearing, but the claimant does? We don't get your story. We get the claimants. And believe it or not, shocking as it may be, the majority of claimants in hearings deny any wrongdoing related to their job separation. So if this case matters to you, if the unemployment rate, claim matters to you, you need to show up to the hearing. So calendar it correctly. You see these other two huge reasons why employers lose claims: lack of evidence, no firsthand testimony. This is what happens at the hearing, okay? You, employer, are going to want to present witnesses who saw whatever I did, the bad behavior that caused you to fire me. Maybe I was stealing from the register, who saw me or who heard me confess or say, hey, so glad they left that, register open. I was able to get $100 because I really needed it. Whatever it was. Anybody else who did not see or did not hear whatever happened in that final incident are considered secondhand witnesses. Secondhand witnesses or written statements, right? They don't have the same weight. First-hand testimony beats out second-hand every single time. So make sure that you don't just bring us your documents and say, look, I can't believe I lost this case. I provided those 2 statements from my witnesses. Because many times you bring the HR person or an owner or a manager to the hearing that was not a first-hand witness, didn't see, didn't hear, heard it from other people, okay? Bring your witnesses. Burden of proof, the other way that employers lose. Whoever initiated the job separation has to prove something to win. So if the claimant quits, if I quit, it's on me to prove I had good cause connected with the work for quitting. If you fire me, you have to prove misconduct connected with the work. Think of these as the scales of justice, okay? This is not a criminal case. You don't have to prove it beyond a reasonable doubt. You just need to tip the scales. If you fire me for being tardy, on my final day, and I come to the hearing, I say I wasn't tardy, and you come to the hearing saying she was tardy, if you think, I don't know if you can see my hands, but basically as you see these scales are going to balance. We both come in equally credible, unless there's some evidence that I'm liar, liar, pants on fire. You say I was tardy, I say I wasn't, the scales are going to balance. So hear me here. If the scales balance, you haven't tipped them. If the scales balance, you lose. Okay? It's not that we don't believe you, but that we believe the claimant more. But if the scales balance, you lose. So what do you need to do? Give us more at the hearing. Maybe there's another witness. Maybe you have a time card that shows that I, clocked in late. Give us something to tip the scales. We can take all kinds of evidence. Okay, if you have witness testimony, have a witness. Sometimes you have things recorded with video, recorded in audio, or you have documents, you have photos. Basically, use your best evidence. Okay, give us the best thing you got. I'm going to tell you one story really quickly. A real case from that we saw coming through the appeal process. The employer here in South Texas had a wrecker service, a tow truck service, and the claimant was the dispatcher. Claimant was fired for sleeping on the job. At the hearing, the claimant actually admitted dozing off. Okay, he blamed the employer, saying they put me on a split shift. I really didn't want to do it. They knew I was tired, etc. So he said, I was dozing off, but it wasn't intentional. Okay. With that testimony, the employer may have lost. This is what the employer presented to us. That's the claimant asleep on at least 2 blankets and a pillow with his shoes off. That looks pretty intentional to me. So that employer won its case, right? It presented its best evidence. And why does it matter? Because you as an employer could save hundreds, thousands, tens of thousands of dollars of money in taxes. Here are the tax rates for 2020. We don't know what they're going to be for 2021 yet, but depending on where you are, that is basically how much you paid in 2020 for each employee per year. And you reimbursing employers with the new weekly benefit amounts, you could be looking at, close to $14,000 depending on the wages of your employee per employee. And I can tell you, you nonprofits, you didn't budget for this. You did not. So remember, this is your case. Count on only one hearing, so you want to present your best evidence. You're going to be that third little pig. Use your best evidence. Tell us your story. Make your story be heard. And with that, I'm going to be ending my presentation here and going to be stop sharing my tray. And I'm going to be presenting our next speaker. Our next speaker is Clay Cole. He is the director of our Unemployment Insurance Division and has been working with our agency. I believe he gave me the years exactly yesterday, but I'm going to go more than 25 years to make sure I kind of generalize it. He must have started when he was very young, and he and his team have been working really, really hard to make sure that the needs of all Texans and our employers are being met during this pandemic. So now I'm going to hand it over to you, Clay.
Thank you so much, Elsa. Great introduction. Really kind, I guess. Hi, everyone. Again, I'm Clay Cole. I'm the UI Division Director. And our unemployment insurance team members are really happy to be a part of the Lunchtime Live event today and hope you gain some knowledge from the information shared today concerning chargebacks relative to reimbursing and tax experience rated employers. So without further ado, I want to introduce the next presenter, and that is Irene Saldana, who serves as our manager for our UIO and CS Unemployment Insurance Operations and Customer Service Department, helping manage the chargeback, mass claims, and combined wage claims units She has 27 years of state service, which includes 17 years with the Texas Workforce Commission helping serve customers in the unemployment insurance program, and much of the time talking with employers like yourself. So here's Irene. Thank y'all.
Good morning, everybody. I am Irene Saldana. I'm the manager of the Chargeback department. Wow, I hadn't realized I'd been with the agency that long. I want to first thank the Commissioner's Office and my director, Clay Cole, for inviting me to be here today. I hope you guys can hear me. I want to today share information about reimbursing and taxed accounts, how the accounts are similar, how they're different, and how the CARES Act affects these accounts. Some of the information that I will be sharing is information that also shared with you. I think that's really important because it just kind of, again, reiterates the process does begin with a claim and what happens when the claim is filed. Before I get into that, I'm going to go ahead and explain a little bit about the difference between reimbursing accounts and taxed accounts. Both account types contribute to the general fund, and it's the general fund that pays unemployment insurance benefits to individuals that file claims. As a reimbursing account, you support the fund anytime we pay an individual who has worked for you and filed a claim and been deemed eligible for benefits. A taxed employer pays unemployment taxes on the first $9,000 gross that they pay their employees in a calendar year. This tax that they pay is paid on individuals who may never even apply for benefits, but you support the fund in that manner. Reimbursing and taxed employers each provide a report to our tax department every quarter. It's called an Employer's Quarterly Report, Form C4. This form is very important because it provides wage data. And as Elsa described, we use this wage data to determine an employee, or as we call them, claimants' weekly benefit amount. Anytime they apply for benefits, these amounts become part of their claims base period. In a base period, it is for a 4-quarter period that we use to calculate the amount TWC will pay that individual if they are deemed eligible. Reimbursing accounts can be subject to be billed some of these benefits. Tax accounts can be subject to be charged some of the benefits. In 2017, the legislature did amend the Unemployment Compensation Act and extended reimbursing accounts protection from billing when employees separated due to misconduct or voluntary quit without good cause. To be exempt from paying reimbursements, the reimbursing account needs to contest the reimbursements. So, again, let's talk about how TWC notifies an employer, reimbursing or tax, of any potential claim and or charges. Anyone that is identified to be the last employer on the claim does receive the notice of application. The notice of application is sent out. The employer is given 14 days to reply to that document to protect their interests. When the account is the last employer on the initial claim, it's the separation investigation that determines if the account will be billed or charged. Reimbursing employers that are part of the claims base period, but not the last employer of a claim, are mailed a form called Wage Verification Notice. We discussed that earlier. There are many different versions of the Wage Verification Notice, but I want to talk specifically about the version BE135Q. A base period employer that receives this document is letting the account know that we're using the wages from their account, and this letter gives the employers the ability to request an appeal to protect their interests. So you must return that document to the appeals department to request a hearing. And that document does provide a 14-day deadline. Taxed employers. Now the taxed employers that are in the base period and not last employer, they receive a notice called Notice of Maximum Potential Chargeback. That goes out at first payment. We mail the notice to the employer, to the address of record that we have for them. The employer has 30 days to complete and return the notice. The notice is sent to the address, as I said, of record, Or if the employer is signed up for electronic correspondence, they receive the notice electronically at the Employer Benefits Services web portal. The Employer Benefits Services web portal is located at our TWC website. We call it EBS for short. This portal provides a variety of services, but one of the services it does provide is an employer, whether you get your notices electronically or not, you can still reply to the notice of potential chargeback through this portal. The benefit of doing this is that the portal is available 24 hours a day, 7 days a week. It is secure, and once you reply and hit submit, we have your response. So it is something that could be very helpful, especially in this COVID issue where mail sometimes can just take a little bit. To respond to the notice through EBS, an employer would log in with a user ID and profile. They would select the Other Services tab, and then from the Quick Links menu, select Maximum Potential Chargeback. The system then asks the employer to key in the Social Security number, and from the Getting Started page, hit Next. Once you're in, the system will present a drop-down of information that you then would select why the person doesn't work for you. I clicked my slide too soon, sorry about that. Because of the COVID pandemic and the economic impact that it has had, this has resulted in the unemployment benefit tiers being expanded on. What I'm going to do now is I want to talk a little bit about the tiers that are available that someone could receive if they file a claim with us. And I also am going to talk about how these tiers can impact either a reimbursing employer from being billed or a taxed employer for being charged. First tier is regular unemployment benefits. In this particular program, both taxed and reimbursing employers can be protected when a claimant is fired for misconduct or quit without good cause. Reimbursing accounts with the CARES Act says that reimbursing accounts that have the first payable week paid of the claim, we call it the waiting week. That first week, their account is the week is funded at 100%, which means they won't receive any kind of bill for that share of benefits. Any other benefits that we pay under the regular program, a reimbursing account in accordance with the CARE Act will receive a 50% reimbursement from the amount that we ask them to pay. The CARES Act says that for taxed employers, if the person is unemployed because of COVID, your accounts are also protected from charge. The next program that a person can receive benefits from is called Pandemic Emergency Unemployment Compensation, or PEUC. This program is 100% federally funded. Employers that are reimbursing or taxed are protected. Next program we call State Extended Benefits. We call it EXB. This program does offer a 100% protection for nonprofit reimbursing accounts, so you are not billed for any of these benefits. Other types of reimbursing accounts are subject to be billed, but the CARES Act does allow us to extend a 50% reimbursement credit for these benefits as well. Taxed employers, you are protected. The final program listed here on the slide is called Pandemic Unemployment Assistance, or PUA. This program, if people receive benefits, is 100% federally funded, and both accounts are protected. Now that I've shared information about the benefit tiers, let's talk about how and when reimbursing employers will get their 50% credit. I know that's important to y'all. Prior to the meeting today, the Commissioner's Office did share some questions about this topic. The question asked, when will the account see the 50% credit from the CARES Act legislation? The answer is this month. This month, TWC will be sending third quarter 2020 reimbursable benefit statements. They're called C58Rs for short. The statement will provide the employer's total amount of charges assigned to your account for third quarter 20, It will list the 50% credit amount to those eligible charges and the final amount owed after deducting the 50%. Next month, we hope to send, or we will send, first and second quarter reimbursing statements. These statements will have amended amounts owed with the deducting of the 50% CARES Act for any qualifying benefits that were released during those quarters. Employers that have not yet paid the due amounts for first and second quarter still have until December 31st to pay without incurring penalties and interest. If you have paid the bill, we do encourage you to leave the credit on the account. The credit can be applied for any future reimbursements. However, if you would like to request a refund, you can contact us at Chargeback and we can send you the information to the link to request the refund. I want to take a moment to talk about still working employees, or as we refer to these individuals, partially unemployed, and the CARES Act. A person working reduced hours may be eligible to receive partial unemployment benefits. If this happens, the CARES Act does extend reimbursement credit up to 50% for those benefits paid. Taxed employers whose employees are partially unemployed are protected from charges. Another question that we received from the Commissioner's office was from an employer asking, are there any effective steps employers can take to lessen the impact of fraudulent claims made on behalf of their employees? The answer is yes. TWC is very concerned about identity theft and fraud. If you suspect identity theft, please contact us immediately. We have a toll-free number available. It is 1-800-252-3642. You can also email TWC at twc.fraud@twc.state.tx.us. TWC will investigate the issue, and if we determine that this claim was filed fraudulently, accounts will receive credits. Sorry. Okay. There we go. Sorry. Technical difficulty. In regards to credits and adjustments, I wanted to kind of spend some time talking about how we apply reimbursements or charges to your account. We apply these charges or reimbursements to your account once a quarter, so you can see them in different ways. Reimbursing employers get a bill called C-58R, or reimbursable benefit statements. Employers can see their charges online through the Unemployment Tax Services web portal. There's a chargeback summary they can see. The information on those screens or on the form are updated once a quarter. So anytime we issue a charge or a billed amount to an account, if at some point after that has happened, we determine that the reimbursing employer or the taxed employer should not have been billed or should not have been charged, we will make a credit adjustment. But it does take until the next quarter for you to be able to see that on either a statement or in our web portal. So there is an example here on the screen. The example reads, if a reimbursing account is determined not billed as a result of an appeals decision on July 30th, 2020, the account will see the credit adjustment on the third quarter 2020 bill, which is mailed in the month of October. A taxed employer receiving a no-charge determination because of an appeal dated July 30th would see the charges removed from the quarterly adjustment update run by tax, usually around December. Again, those chargeback screens are updated a little bit later in the quarter than the reimbursable statements being mailed out. This screen right here does provide some web links that are available to you if you would like to get more information about the topics that I've gone over today. If you'd like to request a paper version of this, please contact my department and we're more than happy to send this to you. I do want to share with you a way to reach us. You can reach us by email at chargeback.report@twc.texas.gov. Before I close the presentation, there were two other questions that we did receive from the Commissioner's Office in regards to claim filing and potential charges or incorrect payment. So I'm going to share those with you right now. This next question has two parts. The question reads, we had a former employee who filed for and was granted unemployment before the deadline to respond. We sent an appeal and never heard back from anyone. Why are claims being approved prior to the deadline given to employers? Second part reads, if a former employee lied on the application and were granted unemployment, will the employers be notified of the correction? So, let me answer the first part of the question. Why were claims being approved prior to the deadline given to employers? The coronavirus pandemic caused national and state shelter-in-place declarations that resulted in the majority of businesses being shut down. That happened really quickly. UI claims filing increased significantly when that happened, and it increased in a very short period of time. Initially, TWC did move forward to issue determinations of payment to assist as many people as possible who were being impacted by job loss and to help relieve any hardship to those individuals and their families. TWC has for some time now gone back to the way that we normally conduct business. We are waiting to issue decisions until the 14-day time period has expired. Once that has happened, we are issuing decisions on claims. If we determine that the employee lied on the application and was granted unemployment, your response is going to help us determine that. So it's very critical that you let us know that information. If we determine that that person was not unemployed or out of work, TWC will open an investigation and issue a corrected decision as needed. The last question is, will employees who got unemployment during COVID and work some way be audited to make sure they do not double dip? That's a really good question. And the answer is yes. TWC runs a quarterly audit when an employer submits their quarterly report, that C4 that Elsa talked about, the C4 that I talked about at the beginning of the webinar. The system, when the tax system uploads that data into their programming, that information cross-matches into the data that we use on the benefit side. Any Social Security number that matches both files, the employer submitting the quarterly report gets mailed a document. It's called a request for earnings verification. Again, a request for earnings verification. We ask employers to respond to the notices online to verify gross wages earned by that individual for any week TWC paid that person partial or full benefits. So your response ensures that we have paid the claim correctly. That concludes my presentation today. So I would like to thank you guys again for inviting me today, and I hope you found this information helpful.
Thank you, Irene. Thank you so much, and thanks again to your team for providing this information and for continuing to handle the questions that I know we send from our office and that employers and claimants have on a regular basis. So thank you, and thank you to Clay for providing his team for us, and again, the leadership there. Our next presenter is Mario Hernandez. If you participated or attended our live conferences that we've had for years, you know Mario. He's one of what I like to call the awesome foursome, which is the four attorneys in Commissioner Demerson's office. So Mario will be talking to you and giving you pointers or information on the best practices for maintaining a safe workplace. Oh, look, it's on my screen. I don't need it on my card. But either way, take it away, Mario.
Thank you very much, Elsa, for that very kind introduction. Good afternoon, ladies and gentlemen. Very happy to be here today with you all to talk about some best practices for maintaining a safe workplace. I want to thank you all for being with us here today for this session of Lunchtime Live. And I also want to thank the presenters for all the great information that they provided. And I do hope to continue that trend with this presentation. So with that in mind, let's dive right into it. As Elsa mentioned, my name is Mario Hernandez, and I'll be talking to you about best practices for maintaining a safe workplace. So the first thing that I want to bring across to y'all is to keep a few things in mind as we go through this presentation, kind of things to keep as a backdrop when we go through the information here. And the first point would be that guidance changes. Guidance changes. As we learn more about the coronavirus and the pandemic and so forth, the guidance regarding response measures to it will change, they'll be modified. So definitely keep up to date with guidance that's being issued related to the pandemic, because it will change over time as we learn more about it. The second point would be to keep up to date with relevant agency resources. We will be talking about those resources as we go through the presentation here to kind of give you a starting off point on where to explore and where to get more information about having best practices in the workplace to have a safe and healthy one. Third, have a plan and follow it. That'll be kind of like the backbone of maintaining a safe and healthy workplace, having a good plan and following it. That's very, very critical, as you'll see as we go through the slides. And also update company procedures as necessary. Kind of goes hand in hand with the first topic that we talked about, or the first point above, that guidance changes, and your policies and procedures to maintain a safe and healthy workplace would be updated to reflect those changes. As we move on, let's talk about the importance of having a safe workplace, aside from the obvious one that it's very good to have a safe workplace. The first point being complaints to regulating agencies. Employers who do not maintain a safe workplace could have complaints filed against them to any number of regulating agencies like OSHA and so forth. So that is a very important reason to have a safe workplace. Secondly, turnover related to workplace safety concerns. Employees, if they feel unsafe going to work, or if they feel like if they brought their concerns to the employer and the employer hasn't done anything to remedy those concerns, employees might feel that their health is at risk, and it might result in them trying to find work elsewhere. And lastly, probably the most obvious one, keeping your workforce safe. Doing right by your employees, doing right by everybody, your customers, your clients, and just having a safe work environment for employees and customers to frequent and interact with. Okay, so moving on along, where to start with this, where to have that plan, how to gather the information to having an effective and safe workplace. Well, there are some safety resources out there. The first being, or the first one that I have listed, is the Centers for Disease Control and Prevention, the CDC. It has a lot of good information about best practices for the workplace. And in addition to that, the Occupational Safety and Health Administration, OSHA, is also a key actor in maintaining guidelines, protocols, and regulations for having a safe and healthy workplace. So make sure that you keep up to date with their information as well. And stateside, we have Texas Department of State Health Services, DSHS. And so this is not an exhaustive list of resources by any means, but it serves and it aims to give employers a good starting off point on how to think about having a plan to maintain a safe and healthy workplace. Now, I've gone on and on about having a plan and having a structure whereby to maintain that safe and healthy workplace. And that's because, according to CDC guidance, that's critical. According to CDC guidance, there should be a plan that's established, implemented, and updated as necessary that is specific to the workplace and identifies all areas and job tasks with potential exposures to COVID-19 and includes control measures to eliminate or reduce such exposures. And also, ladies and gentlemen, you'll see, towards the top of the slide where CDC guidance is, you'll see a little symbol next to it. For this particular slide, it's an asterisk. And if you look at the bottom left-hand corner of the slide, you'll see that same asterisk with the word source. When we get to the end of my presentation, you'll see a source legend where there will be a link to the website where I got this information from. So that way you'll have it for reference and you can visit it and keep up to date with the guidance as time goes on. So that's a big point, having a plan that addresses these key factors. And the plan serves, according to CDC guidance, serves to promote 3 big pillars or 3 big goals, these being preventing and reducing transmission among employees, maintaining healthy business operations, and maintaining a healthy work environment. So we'll talk about each one of these in turn to give you some ideas of best practices to have at the workplace to ensure safety at the workplace. The first thing that the plan should address is preventing and reducing transmission among employees. First things first. According to CDC guidance, employees who have symptoms should notify their supervisors and stay home. Actively encourage sick employees to stay home. And that goes in part with trying to manage and decrease the spread of the virus, and identify where and how workers might be exposed to COVID-19 at work. Remember, employers are responsible for providing a safe and healthy workplace, and that's part of their duties as an employer. And under this particular piece of guidance, the CDC also recommends wearing a face cloth covering as a measure to contain the wearer's respiratory droplets and help protect their coworkers and members of the general public. And you can remind employees and customers that CDC recommends wearing cloth face coverings in public settings where other social distancing measures are difficult to maintain, especially in areas of significant community-based transmission. And also CDC is very clear to point out that a cloth face covering does not replace the need to practice social distancing. So that's also going to be an important measure in identifying where and how workers might be exposed to COVID-19 at work. Take action. If an employee you're not going to be required to shut down your facility, and there's recommendations on how to deal with a situation where an employee is suspected or confirmed to have a COVID-19 infection. You can find that on the CDC webpage. So definitely take a look at that. I won't go into it too far here because due to the allotment of time, that could in and of itself take a considerable amount of time, and I do want to get more information out there. Also, educate employees about steps they can take to protect themselves at work and at home. You can encourage employees to follow the new policies and procedures that you outline at the workplace. And also you can let employees know to kind of avoid using other employees' phones, desks, offices, or other tools and workplace equipment. When possible, it's also recommended to clean and disinfect them before and after use. Again, all in the name of keeping a safe and healthy work environment. So we've talked a little bit about that first prong, preventing and reducing transmission among employees. Let's move on to that second prong of maintaining healthy business operations at the company. The employer can implement flexible sick leave and supportive policies and practices. You can have sick leave policies that are flexible with these unprecedented times. Obviously, there are a lot of unknown situations that popped up that will pop up, employers dealing with things that they haven't experienced before. And so being flexible is very important. In addition, keep in mind as well that the Families First Coronavirus Response Act requires certain employers to provide their employees with paid sick leave or expanded family and medical leave for specified reasons related to COVID-19. And you can find more information about the Families First Coronavirus Response Act on the United States Department of Labor website, dol.gov, I believe their website is. So definitely keep on top of that. Communicate supportive workplace policies clearly, frequently, and via multiple methods. Employers for this particular practice may need to communicate with non-English speakers in their preferred languages, so that way everybody's on the same page. You can, if you're working with contractors, you can communicate to any contractors or on-site visitors about changes that have been made to help control the spread of COVID-19 and ensure that they have the information and capability to comply with those policies. The employer can also consider using a hotline or another method for employees to voice concerns anonymously. So that all goes towards the point of communicating supportive workplace policies in a clearly, frequently, and multiple method process. And the third point here is establishing policies and practices for social distancing. We've all heard the term by now, social distancing, a key tool in these pandemic times. You can implement flexible work sites, i.e. teleworking. If teleworking is a possibility for your workplace, you can look into those measures. You can have flexible work hours. You can increase the physical space between employees at the work site by modifying the workspace to, promote the social distancing. And so those are kind of a few of the factors that the CDC recommends in terms of policies and practices for social distancing. And so now that we've talked about that second prong, we can go ahead and move on to the third item, which is maintaining a healthy work environment. Also very important under CDC guidance. The first measure that employers can practice is give employees, customers, and visitors what they need to clean their hands and cover their coughs and sneezes. Under this particular item, the employer can consider providing tissues and no-touch trash cans for this particular element. You can provide soap and water in the workplace. If that's not available, you can use an alcohol-based hand sanitizer that is at least 60% alcohol, and to ensure that those supplies are maintained. Ideally, the CDC recommends placing touchless hand sanitizer stations in multiple locations to encourage hand hygiene. You can place posters that also encourage this practice. So all about communicating to your workers that, hey, this is very important. We're all trying to do our part to limit the negative effects of the pandemic. And again, just as a kind of a matter of just policy enforcement in general, the employer should also be very mindful of making sure that policies are are implemented uniformly and consistently. All personnel, all staff, whether it's the front office staff or executive staff, everybody should do their part in maintaining a safe and healthy workplace. In addition to giving the employees and customers and visitors what they need, perform routine cleaning. Again, another key step in limiting pandemic-related consequences. Routinely clean all frequently touched surfaces in the workplace, like workstations, keyboards, telephones, handrails, doorknobs. If surfaces are dirty, you can clean them using a detergent or soap and water before you disinfect them. And the CDC has more information about the proper disinfecting methods and the PPE that would be associated with such disinfecting methods and so forth. So perform routine cleaning and also minimize risk to employees when planning meetings and gatherings. For instance, kind of like what we're doing right now, use video conferencing or teleconferencing when possible for work-related meetings and gatherings. And also, when video conferencing or teleconferencing is not possible, hold meetings in open well-ventilated spaces, continuing to maintain a distance of 6 feet apart, and wear cloth face coverings. So again, all those recommendations taken right from the CDC. So we've talked about those 3 prongs. It all goes to the point of making a plan that you can enforce and implement, and that is easily communicated to your workers so that everybody can play their part in maintaining that safe and healthy workplace. And just another word, ladies and gentlemen, this is not exhaustive guidance from the CDC. The CDC has much more information that you'll definitely want to take a look at by visiting their webpage, and a good starting point for that would be visiting the link that is provided for in the source page that'll be at the end of my presentation, because in addition to what I've talked about right now, there are other considerations that the CDC recommends that employers will definitely want to take a look at, things that I wasn't able to touch on. Things like if you've got employees who commute to work using public transportation or ride sharing, things like that. Considerations if the employer is thinking about conducting daily in-person or virtual health checks. And depending on what the employer does, that might touch on other employment-related laws. So it's all the more reason for employers to make sure that they're doing their due diligence and gathering the information necessary to make informed and educated decisions about their policies and what they implement at their workplaces. So definitely keep that in mind. Okay, so we've talked about the CDC, and we'll move on to OSHA. And so again, new symbol at the top of the OSHA guidance. And so again, new symbol comes a new source. And OSHA has many resources for best practices. They have guidance for specific industries, because I'm sure all you employers out there are well aware that there are many different services that employers in Texas offer to their customers. And sometimes employers in different industries will have different regulations and different protocols, different laws that they'll need to follow. So OSHA has really good information about that. They also have information on hazard recognition, because part of having a good, effective plan for a safe and healthy workplace is identifying hazards in the workplace and how they might interact with your employees and your customers. So definitely take a look at that information on the OSHA guidance on the OSHA website. And guidance for returning to work. OSHA has a really good PDF with that detailed information in there. So that's OSHA guidance that can be found on their website. And in addition, they have very helpful FAQs, PDF downloads, and information on workers' rights and employer responsibilities under the OSHA laws and regulations. So again, OSHA is a key actor and a key consideration that the employer will want to keep in mind as it goes through and implements its plan to have a safe and healthy workplace. So always keep OSHA in mind as well. Okay, moving on to state guidance. A good resource for information is the Office of the Texas Governor, and you'll see the website right there. It's gov.texas.gov. You can visit that, and it'll have executive orders, information about the executive orders, and such as Executive Order 29, requiring all Texans to wear a face covering over the nose and mouth in public spaces, with few exceptions, in counties with 20 or more positive COVID-19 cases. So you want to keep up to date on executive orders as they come through, and you can do that on the Office of the Texas Governor's website. And also, you'll find information about the governor's strike force to open Texas. It'll have open Texas checklists with minimum standard health protocols for all employers and event organizers and other specific industries. And that website is down there at the bottom. You can see open.texas.gov. And just as a preview of coming attractions, Open Texas checklists contain several different categories, such as the ones you see in the screen right before you. Now, admittedly, the elements that I have here are the ones that appear in the checklist for all employers and event organizers. There are other checklists as well that relate to specific industries. So definitely visit the website and see which one applies to you. But there's information about minimum health protocols, minimum standard health protocols for employers to follow in our great state. And also from the state guidance side, the Texas Department of State and Health Services is another resource for information for businesses and employers. It has communication tools, instructional videos, and again, those minimum standard health protocols. So definitely take a look at that as well. And some local guidance. We don't want to leave local communities out of the loop. Depending on location, local authorities may have different rules and regulations for that location. County and city officials are good resources of local information for the respective locations and communities. So definitely reach out to those individuals for help on the local side of things. A note on hand sanitizer. The U.S. Food and Drug Administration, FDA, has a web page regarding updates on hand sanitizers consumers should not use. And you can find this web page at the following web address, and it's there for you. And I make mention of this because hand sanitizer is a frequent consideration in, maintaining a safe and healthy work environment. So just make sure that you visit the web page and are up to date on those updates on hand sanitizers that consumers should not use. Okay, takeaways. We're at the end of our time here. Gosh, that went by really fast, didn't it? Gather resource information. That's going to be critical. Without information, you can't have a plan. So gather that information. Establish and implement a plan for safety protocols at the workplace. Keep up to date with changes in guidance. Update policies and procedures as necessary. And consider hiring legal counsel for complex situations. This is a good time to point out that, again, the presentation that you see, although it is, in my opinion, good information, it should not be mistaken for legal advice. If you want a formal legal opinion, if you happen to find something that may conflict, you find information here, okay, how does this work for our company, or how we have specific questions on how to implement it, you can always consider hiring private legal counsel for those complex situations. That type of attorney could give your company a formal legal opinion and let you in on any particular important situation or important item that may have been overlooked. All right, and as promised, here's my source legend. You'll see the resources that I've used on my presentation here, so definitely visit those because, again, as I mentioned, the resources that I presented were not exhaustive. There's still going to be other information you want to keep a hold of. And with that, I am completely out of time, so thank you all so much for your kind attention. I'm going to close my screen now, and I am going to introduce our next speaker with information you'll really want to hear about. His name is Tommy Simmons, and you've probably heard of him from our previous Lunchtime Live sessions. So without further ado, take it away, Tommy.
And
Sorry,
you're muted, Tommy.
You are muted.
Thank you. I appreciate that, Elsa. We work as a team. It takes a team. I really appreciate everybody being in on this webinar today. I hope it's a very fruitful time for everybody. And usually one of the best things to learn from a conference like this is the available resources, because you can't be an expert, you can't memorize everything you hear, but you can certainly find out where you can get more information. And my contact information is on this first slide of my presentation about payroll tax. And we have an FAQ file, frequently asked questions, at that address shown there. And I believe that link is also sent out in the announcement for the webinar. And our book, the Texas Guidebook for Employers, especially for Texas employers, is on our website. It's a free book and it's in web page format, and you can also request a printed version and download a PDF version. Our web app is really handy and it will work on any mobile device. Now, I wanted to focus today on the basics about payroll taxes. The most important thing to keep in mind, I think, is that the payroll taxes are owed on wages, wages that are, paid to employees for employment. Payroll taxes are not, owed on anything else. Oh, just I'm seeing a thing that my slides are not shared somehow. I apologize for this interruption. I thought I'd already shared my slides. Okay, I hope that the slides are visible now. Let me go back in case y'all missed my very first one with the contact information. And by the way, copies of these PowerPoints are available simply upon request. And I think that there may be a link on our website to downloading the presentations. Okay, payroll taxes are owed only on wages for employees. Wages are compensation for personal services rendered. That means if somebody is working for pay, that pay is subject to payroll taxes. On the federal side, there are a number of different taxes: withholding, FICA and Medicare, and federal unemployment tax. On the state side, we have only the state unemployment tax that is administered by the Texas Workforce Commission. First, a word about what you should do before you do anything else with a new employee. Get a properly filled out and signed W-4 from them. That will enable you to properly report wages to the TWC and the IRS. Lessons learned by a lot of employers, for many, many years, they really regret it if they don't get a W-4 from every employee at the very start. So you should make sure that you get a signed W-4 from every employee, and that will allow you to properly report the wages. Do it before you let them do any work. And then also, of course, another important piece of new hire documentation is the I-9 form, but that's a question for another day. Now, on the federal side, federal payroll taxes, the best source of information for federal payroll taxes would be these publications on the irs.gov website. Publication 15, Publication 15A, and Publication 15B. Publication 15 has the basic withholding tables and information also about proper classification of workers. Publication 15A has supplementary payroll tax information about exemptions from payroll tax, and Publication 15B talks about taxation of fringe benefits. As far as getting assistance with federal payroll taxes, for most people, this is not, one of their normal talents, so it's good to call for expert assistance. It's a good idea to call the IRS. They have a local office directory at that web address shown in the first item. If you want assistance over the phone from the National IRS office, they have a hotline that you can call. It's at that number there, but they warn you on there that the wait in getting through by phone can be very, very long. That's why I don't put the number down. It's very difficult to reach certain government agencies by phone these days. Local IRS offices are more accessible. So look at the local IRS office directory. An alternative would be to consult a certified public accountant or utilize good payroll accounting software, which already has all of the current year's payroll tax information programmed into it. As far as the federal unemployment tax is concerned, it's a flat rate of 6% on the first $7,000 of an employee's wages in a calendar year, but there is a 90% discount for employers who operate in a state with a federally compliant unemployment system like we have here in Texas. And if you pay your state unemployment taxes properly, then you get to pay only 0.6% for the federal unemployment tax on the first $7,000 of an employee's wages. And 0.6% of $7,000, that's $42 per employee per year. That's the federal unemployment tax. That pays for administration of the unemployment system in all 50 states, and Texas gets a share of that money. The state unemployment tax is the only payroll tax on a state level that we have in Texas. It's owed to the TWC. Employers pay it. It's not something that an employer is allowed to deduct from an employee's wages. The unemployment tax is based on the unemployment claim experience of a particular employer. If your business has had a lot of unemployment claims and chargebacks go onto its account, the unemployment tax will be higher than it would be if you didn't have any claims or any chargebacks. New employers pay a flat rate of 2.70% for the first 6 calendar quarters that they are in business. That's about a year and a half. And that works out mathematically to $243 per employee per year. So that's the new employer tax rate. It's the same for everybody who's in their first year and a half of business. After that, the business becomes eligible for a calculated experience rated tax rate. If you don't have any chargebacks during the past 3 years, then you'll get the minimum tax rate, which is basically the replenishment tax. The replenishment tax is given as a flat rate that includes a 0.1% ETIA tax, and earnings and training investment assessment. Employers with chargebacks during the past 3 years will have a calculated tax rate, and their rate will probably be higher than just the replenishment tax by itself. There is a specific formula that is hardwired into the Texas Labor Code, and the TWC follows the formula provided by the legislature. The central component of the tax rate is called the benefit ratio, which is the total chargebacks for the past 3 years ending on September 30th of the year before the tax rate is effective, divided by the total taxable wages paid out to employees over the same 3-year period. So basically, if you have a higher chargeback total, you're going to have a higher benefit ratio and a higher tax rate. If you have a low chargeback total, that's going to result in a lower benefit ratio and a lower unemployment tax rate. Here's an incentive, though, for employers to properly pay their unemployment taxes on time. The only wages that can go toward that 3-year taxable wage total and help lower your tax rate are the wages on which you have already paid the unemployment tax. If you owe unemployment tax for wages paid in the past, you're not going to be able to get credit for that in the calculation of the tax rate, and your tax rate would be needlessly higher that way. So that's one huge incentive for paying on time. The rest of the calculation is a little bit complicated. It's programmed into the electronic version of our book, the Texas Guidebook for Employers. It's also programmed into the web app that you saw the address for on the first slide. But basically, to get the effective tax rate that you apply to the first $9,000 of an employee's earnings in a calendar year, you multiply the benefit ratio by the replenishment ratio. That gets you the general tax rate. And then the general tax rate is modified by adding the replenishment tax and the deficit tax if there's a deficit in the state unemployment insurance trust fund. It's also affected by a surplus credit. If you have a surplus on your in the trust fund balance, TWC will have a surplus credit calculation to do. That happened, the last time that happened, I believe, was back in 2008. There might also be an interest tax if Texas owes interest on a federal unemployment loan. Luckily, under the CARES Act, all of the loans to states from the U.S. Department of Labor are interest-free. And another possible tax is the obligation assessment tax, but that is in existence only if TWC needs to repay bonds that are issued to pay unemployment benefits. And the only time bonds are issued is if the state is trying to avoid interest on loan advances from the Department of Labor. So Interest tax and obligation assessment tax are fairly safe to rule out for 2021. The effective tax rate is the result of all of those factors added together. Now, anytime there's a shortfall in the Unemployment Insurance Trust Fund, Texas by law has to maintain it at a certain minimum level that's known as the floor, and half of the shortfall is recovered through the replenishment tax. That's the minimum tax that everybody pays, even if you had no chargebacks. The other half is recovered through the replenishment ratio, and the tax rate calculation formula is shown on our website in detail on the tax department section of the website at that address shown in the bottom item on this slide. If you go there, you'll see a detailed explanation of the tax rate calculation formula. Again, that formula is programmed into the electronic version of our book, and it's also in the web app. New unemployment tax rates for the following year are always published by the TWC at the end of the year. It starts with September 30th of each year. That's the final day of the 3-year look-back period for calculating the 3-year chargeback total and the 3-year taxable wage total. And that is already come and gone. That's 15 days ago that date arrived. So now we're at the second item here on this slide. In October, this month, the tax department assembles all of the wage and chargeback information needed for the tax rate calculations. So they're pulling it all together. And there's a lot of information there. In November, the calculations are carried out and finalized. The tax department shares the aggregate information, the overall information with the commission. And then the tax rate notices, the form C-22s, are mailed out to private taxed employers after the first week of December. So sometime between December 7th and December 14th is the most common time for those tax rate notices to go out, and pay close attention to those, because the tax rate notices contain valuable information for understanding your tax rates, including the 3-year chargeback total and the 3-year taxable wage total. The tax rate notices will also include information on the other components of the tax rate, whatever they are, whatever they turn out to be. And it's still too early to tell exactly what those components will be. The tax department is working on that right now as time allows, and they must have it completed though by the end of November, so that they can send out the tax rate notices after the first week of December. Any employer who disagrees with a tax rate or any decision of the tax department can appeal that matter to the commission via a special rule. It's Rule 815.113. Those are so-called Rule 13 appeals. And basically, it allows the commission to hold a hearing, and then the 3 commissioners vote on the outcome of the appeal. So a decision of the tax department is directly appealable to the 3-member commission. We have detailed information about the Rule 13 appeal process online in the tax department section of our website. And that's all that I have time for on the prepared slides, but during the remaining time, I was asked to address some of the questions that came in, some of the general questions that the other attorneys were not able to get to. Just real quickly, I'll go ahead and hit those. I'd like to know more about how employers begin the process of utilizing tax credits. That sounds like they're asking about the FFCRA paid sick leave tax credit. If you have employees missing work because of COVID-19 or quarantines, the IRS website at irs.gov has all the information you need about the procedures to follow for claiming those payroll tax credits for the money that you pay to employees who go on the FFCRA paid sick leave. What must employers know about using gig workers in Texas? And that is governed by a new rule adopted back in 2019. And that rule is Rule 815.134B. You can find it on our website. We've got a link to the rules. And that's Rule 815.134B. And if you have any questions, I'll be more than happy to address those. This slide shows the employer info at twc.texas.gov email address for sending questions. If you have questions about gig economy workers, I'll be glad to address those. Liability release waivers. Should they be printed and signed, electronically signed, or is a verbal authorization good enough to count for protecting the business, the team members, and the public? That's really more of an issue of personal injury law and general liability law, and that's outside my area of expertise. However, I can tell you that a verbal authorization, a verbal liability release is definitely not going to be good enough to insulate your business from liability. They can be electronically signed. Texas state law says an electronic signature that is valid and authenticated is as good as a physical signature on a piece of paper, but the best way to get something like that is physical signatures on a piece of paper. Get advice from a private sector law firm, though, before you try to get people to sign liability release waivers. Should we, as employers, make it mandatory for employees to decide on the recent payroll tax holiday, or should we just decide on our own? Definitely don't decide on your own, because employees could complain later that you didn't give them a fair chance to opt in or opt out. Some employers are choosing not to participate in that at all. It's not much of a tax holiday because the taxes are still owed. Employees will have to come up with that money later, and that may be difficult and cause a lot of trouble. So a lot of employers are just deciding not to do it, but definitely if you just decide to allow it, let employees opt in or opt out. Look on the irs.gov website for more information on that, and also consult a tax professional. Unemployment taxes, will there be any advantages for businesses? Not under state law, more than likely not under federal law. They will be imposed just as they always have been. What are the requirements for an exempt salaried employee under the Fair Labor Standards Act? Well, basically, exempt salaried employees are paid a true salary of at least $684 per week, and they're the very top, most senior, most high-ranking employees in the company. The president of the company, the executive staff, the managers of departments, company attorney, the HR director, payroll director, and so on. It's not good enough to just be paid a salary. That doesn't make somebody a salaried exempt employee. And for those employees, though, how are vacation, sick, and overtime claims treated? Well, overtime is not an issue with a salaried exempt employee. They're just paid the salary. Vacation and sick leave policies, just follow the policies. Under the Texas payday law, those are enforceable. Okay, and I'm afraid we may be running out of time. I'm going to ask our conference coordinator, Ms. Kimberly, if we have time for more questions, or if I should offer this up for closing comments.
Well, Tommy, we're right at 2 minutes until 1, so you can do a couple of more questions and then we can end there.
Okay, thank you very much, because I like answering questions. Question, can employers reduce exempt employees' pay or hours worked in an effort to avoid layoffs or furloughs? The answer is yes, but be careful, because as Elsa Ramos mentioned, in pay cut cases, TWC follows a general rule of thumb known as the 20% rule, under which if a pay cut is 20% or more, generally that's good cause connected with the work to quit and file an unemployment claim. So be careful about that. Also, under U.S. Department of Labor guidelines for exempt salaried employees, any pay cut like that should not be made so that it looks like it might be an end run around the salaried employee rules, to where They are guaranteed a particular salary no matter how many hours they work in the work week. So if you have a pay reduction, it's going to be a reduction in the salary amount. It cannot go lower than $684 per week, though. Below that, an employee is presumed to be non-exempt. If you have any questions on that, let me know. If an employer received a small business loan, are they still eligible for tax credits with paying employees from the FFCRA? Definitely, yes. So just look at the irs.gov website for information about the COVID-19 related tax credits. Relation between TWC determination of benefits and an ongoing DOL wages and hour division investigation. There is no direct connection there. The Department of Labor Wage and Hour Division does not have any kind of meaningful contact or involvement with our unemployment insurance division at the TWC. If somebody has not been paid minimum wage and overtime and they've complained about it and the employer hasn't done anything to effectively address their concerns, that might come up as an issue in a resignation case, because it would help the claimant prove that they had good cause connected with the work for quitting. Another question. I have an employee who moved to Virginia but has continued to work for us remotely. Do I need to do something different because he no longer lives in Texas? The unofficial answer, because I'm not with the tax department, is probably not. Probably you'll continue to report his wages to Texas because the work is based in Texas from a company office standpoint, and it's directed and controlled from Texas, and it benefits a Texas company. So the answer is probably you don't need to do anything different, but you want to get that answer straight from the horse's mouth. So contact the tax department at 512-463-2700 and ask to speak with somebody about the law regarding location of services. All right. Unfortunately, I believe that's all that we have time for. I wish we had more time to talk about more questions, but I'd like to thank everybody for participating today, and don't be shy. You see the email address there, and you see the addresses for our book and so on. Let us know if you have any questions, and hope y'all have a real good rest of the day. Thank you very much.